So, what is consumer confidence? It's a statistic that's measured on a monthly basis, but how is it derived and why do we even care? The issue really in consumer confidence is that when consumer confidence is high, you're willing to spend your money. In other words, you have confidence that you're going to have a job tomorrow, that you're going to be able to be gainfully employed and bring in the next paycheck. So you're more willing to part with today's money, knowing that tomorrow you're going to have the next paycheck to replace it. So it's really a measure of an emotional feeling about how the economy is doing. And it's a gauge or barometer on how well the government is doing in managing the money, how well they're doing in managing the economy, what the Federal Reserve is doing, what interest rates are doing, how the housing market is going. All of these things kind of get broiled up all together in this consumer confidence issue. It's measured by consumer confidence surveys. A certain number of individuals are surveyed every month, and with their usual statistic mumbo jumbo that they use, they put together a statistical body of a significant number of people that can share their opinions, and they compile all those opinions into an index. And so the index then is published on a yearly basis. So what's it doing right now? Well, right now, the consumer confidence is being challenged by a lot of things happening. Number one, we all know that there's a high amount of inflation right now. Oil prices have just gone crazy, and the amount of money we're spending at the gas pump has increased dramatically. When Ukraine was invaded by Russia, of course, there's a whole lot of geopolitical unrest, a whole lot of economics go into that as sanctions go into place, and we stop buying a lot of goods from Russia. Thus, we have to buy goods from other places, and that drives its own amount of inflation into the marketplace in various areas of commodities and such that we would have bought from Russia that we have to find different markets for. What's happening then is, with rising interest rates and inflation and all these things happening, is that in general, the confidence in the American economy is going down. Now, this latest month, it upticked just a little bit, but you can see in the graph that I just put up on the screen that the economic sentiment has generally been going downward for the last full year. If we increase this thing to 3 years, we see what happened at the beginning of the coronavirus here, and all of a sudden all the businesses and all the closures that went into place, it plummeted from nearly 100 down to 71. And it's kind of languished there for a while throughout 2020 and into January 2021 and on into the middle of 2021, May, April, June, July, in that area there, it was doing fairly well. It seemed to be trending upward, but ever since then, it has just been slowly edging downward and downward. And of course, what we can see is that the impact of all of these things happening, the presidential election, the changes that are taking place at the head of our government, the rampant inflation that has taken off, since beginning of 2021, and the now with Jerome Powell saying that they're going to increase the basic interest rate that banks are charged, which basically floats through the rest of the economy, affecting mortgages and car loans and all of the things that we purchase on credit, especially including all those credit cards that have those flexible rates where the credit card company can just send you a little letter in the mail and saying, oh, by the way, we're raising your interest rate another 1 or 2 or 3 points. Those wonderful little presents we get in the mail because we have money on credit cards or credit debt on credit cards. So it ripples through the entire economy. And so what happens in those situations is consumer sentiment begins to fall. You become less confident as your interest rates go up, as your ability to go to the grocery store and buy the usual amount of goods for your family to put food on the table, as that bill keeps increasing and you have less and less disposable income, you become less confident and more agitated about what's going on. Now, you can see that there was a period of time of very good economic stability, all the way from just before the coronavirus, backwards through 2018 is the farthest I can take this particular chart. It was relatively high in the 90 and higher range, but since coronavirus, it's been difficult to get that back up into that range, with 1 month hitting 88, but that was the highest that it's been. And now, right now, this March figure is the lowest that it's been since 2011. So we're probably headed into a short-term or long-term recession. Depends on how gently the Federal Reserve is able to rein in inflation. I'm sure consumer sentiment is probably going to go a little bit lower before it starts seeing much improvement. Hope you've enjoyed what I've given you here. I have more videos showing up on the screen, and I hope to see you again. Thanks.